hello and welcome. You're watching First Take here on News 9, where we bring to you the morning buzz on the Lal Street. I am Suyash Maheshwari, and with me in the studio is my friend and colleague Amit Ranjan. Now we have got lots to talk about. Through the next half an hour, we have got the results of IndusInd Bank that come out during the market hours or so. But before we get into all that, let's also look at how the global setup is this morning. Amit, over to you.
Good morning, Suyash. It's red everywhere in the West as global stocks sunk to a one-month low as hopes faded for an early rate cut. Dow Jones closed in the negative at 0.25%. S&P 500 closed in the negative at minus 0.56%. Nasdaq Composite closed in the negative at 0.59%. Coming to the European markets, big drop. Stocks 600 closed in the negative at 1.13%. Asian markets are doing slightly better. Hang Seng this morning is up 0.67% and Nikkei is up 0.48%. Almost everything, whether it's stocks and everything in the Western markets, they're all going down.
All right, and talking about the global markets, dollar index that moved to a 1 month high, but overnight there was not much movement. But as I just mentioned, it continues to hold to close to that 1 month peak versus major pairs, and this was on the back of robust US retail sales data that came overnight, and that added to the expectations that the Federal Reserve will not perhaps rush to lower interest rates anytime soon. Now, the dollar index, the last time I checked, was hovering somewhere around the 103.4 sort of levels. Now, a strong dollar has also pushed the US 10-year bond yields to a 5-week high. The 10-year treasury yields currently sit above the 4.1% mark, and these are the highest levels that we have seen after a very long time. So a bit concerning for emerging markets, including India. But oil, let's talk about oil as well. Oil price edged higher on Thursday, and this was at the back of an OPEC forecast, which indicates that there will be a relatively strong growth in global oil demand over the next 2 years. And then there was also a cold blast in US which disrupted some oil production. Brent crude, as we speak, is hovering somewhere above the $78 a barrel mark. But coming back home, Indian markets witnessed another day of sell-off. In fact, Nifty opened gap down, and it opened just above the 21,400 mark. We did make some recovery from there on, but as of 9:45 a.m. Nifty has in fact slipped below the 21,400 mark, and it's currently near the day's low, down about 1% or so. And the broader markets are also feeling the heat. Both indices, the mid cap and the small cap index, are down somewhere around 1.5 to 2%. And let's talk about the mid cap index first. We have in fact broken below the 47,000 mark on the index as well. That is currently down by about 1.92% at 46 to 44 level. The small cap index is also under pressure. It opened in the green, but we saw sell off from there on, and currently it's down about 1.5% or so. Volatility continues to pick up. India VIX as of 9:30 a.m. this morning was up about 0.6%, and that sits above the 15 level. And then again, we have not seen 15 sort of levels in the last 1 month or so. But with that, let's also bring on board Mr. Santosh Meena of Swastika Investmart. Santosh, thank you for joining us here on News 9. Now, Nifty yesterday closed below the 20-day moving average for the first time, I think, since early November, when that massive 2,000 plus point rally to record highs began. So does that indicate that the sentiment is not only bearish in the near term, but also in the medium term?
Yes, first of all, good morning, everyone. So we are seeing a low awaited correction. The triggers are like HDFC Bank's earnings and US bond yields. So this correction was long awaited, but I believe this correction is healthy, and it will provide a opportunity to enter into pre-election rally. But yes, it is easy to say because most of the investors won't have a cash because they are stuck at higher level. Yes, I think this correction is healthy, and today there is not much fall in banking index. We are seeing major pressure in broader market. I was worried about broader market yesterday because everyone was talking that January month would be before the large cap and small cap and mid cap will outperform. But yesterday they outperformed and we saw a massive fall in large cap stocks. But today the actual picture is we are seeing and there is a pressure in broader market. But I think this is healthy correction and it will be a good buying opportunity. We are seeing like kind of capitulation phase, and I think this correction will be short-lived. In current market scenario, market bounce back very sharply from lower levels. So if I talk about the levels on technical levels, on immediate basis, 21,225 is the first support level, and I believe worst case should be 21,000 to 20,800 area where we can expect a bounce back in the Nifty. And if I talk about the Bank Nifty, 45,500 is a 100-day moving average and 44,800 is 200-day moving average. So I'm expecting a strong bounce back from this area in Bank Nifty as well. And today we can see some buying interest in a large banking like ICICI Bank, even Kotak Bank, and even SBI is not falling today. Only small banks are falling today. So large cap stocks, especially Bank Nifty and Nifty, are heading towards important support levels, and market is oversold. Put call ratio is below 0.7. So we can expect a short covering in coming days. Early morning we are seeing pressure, but yes, you have to be cautious in broader market, especially some of the stock. We will see buying interest again from lower level, but you should be cautious in broader market.
So, considering that the kind of correction that we are seeing and the expectation that you broadly have of a recovery in the next few sessions, what would you recommend traders do? Like, should they sit out and avoid this choppiness and wait for signs of recovery, or, continue buying these dips?
As I said, you should start buying near to 21,225, near to 21,000 level in Nifty and Bank Nifty. For this current level is from 45,500 to 44,800 is a good buying zone. So in last 2 days, Nifty and Bank Nifty have corrected too much. So I think you should start buying, deploy your 25% of 25 to 50% from at current level, and if Nifty slips below 21,000 level, then you can deploy your 100% cash in large cap stocks or even Nifty Bank Nifty. I believe from that level we can see a smart recovery ahead of election.
Good morning, Santosh. I'll drive your attention to Asian Paints, which announced their Q3 results yesterday. Little short of expectations what the analysts had from them. International sales have remained flat. Their kitchen and bathroom fittings business has declined, and their stock today is down almost 3%. Is it a time to buy or just wait and watch a little bit?
If we look at the Asian chart of the Asian Paint, so from December 2021, it is consolidating between 3550 to 2750 zone, and currently it is still in a consolidation zone where level of 3000 is a strong support area. So I believe 3000 should act as a floor. On the upside, it has to cross 3500 area to get a momentum. So after this correction, I would suggest start some accumulation in Asian Paints around 3000, 3100 levels because risk reward is favorable. Yes, the main momentum will come above 3500, but from current level, 3500 is far, so you can get around 8 to 10% of upside if it bounce back from 3000 level.
All right, 8 to 10% upside possible for Asian Paints. But let's also talk about HDFC Bank. Now, that has been a major drag on the market. In the last 2 days alone, the stock has corrected somewhere around 10% or so. But, this morning we are seeing some bit of a recovery and the stock is hovering near that 1500 mark. But, from a technical standpoint, how is it looking on price? Do you foresee more pain ahead?
Yes, after a sharp correction, HDFC Bank is approaching important support area of 1460 because 1460 is a previous low which was made around in October 2023. And whenever it falls, it sees sharp correction. It took support at 200 week moving averages, so which is also at current level of 1460. So around 1500 to 4050 area is a strong support zone. So I can expect some bounce back or some buying interest from that level. But for I believe it may see some kind of consolidation in the area of 1450 to 1600 for next couple of months. But yes, I think downside is protected around 1450 level.
Santosh, yeah, before we let you go, what are your picks for the investors today?
Yes, as I said, the pressure in broader market, but some of the stocks which I am looking, they which can outperform from here in this correction, you can look for buying opportunity. Three mid cap on the buying side. I'm also looking for two short ideas as well. So first is Capacite Infra. You know that recently they have completed their QIP, and because of the QIP share listed day before yesterday, we saw a pressure in the stock. But now currently it is trading a strong support area. So we can expect a target of 300 in next 1 month, where 250 should be a stop loss. Another is MOIL. After a strong consolidation, it is witnessing breakout of flat formation. Today it is under pressure, but today's fall is a good buying opportunity for you. You can keep a stop loss of below 300 and target of 375. And another one is GMR Infra. This counter is strong bullish momentum, and again, similar. Today's fall is a good buying opportunity. You can keep a stop loss of 75 and 80 and target of 90 rupees. And two short idea, IDFC First Bank. We are seeing pressure in the HDFC Bank because of the financial results are problem because of the merger of banks. Similar case could be for the IDFC First Bank, and you can short at current level where 75 should be your target, 88 should be your stop loss. And last is SRF. We saw a success rally in SRF, and it faces resistance at 200 moving average. Now again it is resuming its downtrend. So 2200 should be your target, and 2360 should be a stop loss.
All right, that's the view coming in from Santosh. Sir, always a pleasure speaking to you. Thank you for giving us time here on News 9.
Thank you.
But with that, let's take a short break. On the other side, we'll be joined by Mr. Mohit Gang, and we also bring you the key expectations on IndusInd Bank that comes out with its December quarter results in just a while from now.
Ram's Ayodhya rebuilt. Ram Lala's Pran Pratishtha. Countdown to January 22nd. Dateline Ayodhya. Catch the mega coverage only on News 9 Live.
वर्ष 2070 तक भारत नेट जीरो का लक्ष्य हासिल करेगा.
There's certainly a wall of capital coming into the clean tech, climate tech space, not just in India, but across the world.
This and more, streaming on world's first news OTT, News 9 Plus. Download now.
Since the last 2 years, Khalistani terror groups are threatening Indian diplomats in Canada, US, UK and Australia. Investigations of these threats led us to the first ever abduction and killing of an Indian diplomat, Ravindra Matre, in UK's Birmingham in 1984. Our months-long investigation finally led us to the murderer of Ravindra Matre, who has been hiding in Pakistan-occupied Kashmir for the last 40 years. Watch our exclusive documentary, Murder of an Indian Diplomat, where we reveal the man who killed Ravindra Matre.
Stop searching, start streaming. Download the world's first news OTT, News 9 Plus, ahead of the curve.
Welcome back. You're watching First Take here on News 9. And Indian markets now, they continue to reel under pressure, and as we speak, Nifty has in fact broken below the 21,300 mark as well. As you can see on your screen, as of 10 a.m. this morning, Nifty 50 was down about 1.3%, and just below the 21,300 mark. In fact, we are very close to the day's low. Sensex has also fallen close to around 700 points or so. That index is down about 1.12%, and we have fallen below the 71,000 mark on Sensex as well. The broader markets now, they are really feeling the heat this morning. Nifty mid cap 100 and the small cap 100, both indices are down somewhere around 2.5% this morning, and the small cap index and especially opened in the green, but we are seeing a major correction set in for the broader markets as well. Both indices, as I mentioned, are down somewhere close to 2.5%. Nifty mid cap has broken below the 46,000 mark, also is down about 95 points from those levels. Mid cap index has also broken below the 15,000 mark, and this is for the very first time in over a month. Volatility continues to spike. India VIX as of 10 a.m. this morning is up 3% and well above the 15.5 mark. But Amit, let's also talk about the results season, because we are in the thick of it, and a big company comes out with its Q3 print, and that's IndusInd Bank.
Yes, IndusInd Bank. Now, analysts are expecting, because there is a moderation in the cost of funds, the net interest margins are likely to remain flat. Their profit after tax is likely to grow 16.5%. Their net interest income is expected to grow almost 17%. Regarding the asset quality, the gross non-performing assets are predicted to improve marginally to 1.9%, up from 2.1% the same quarter a year ago. The net non-performing assets, on the other hand, are expected to remain steady at 0.6% for the quarter ended last December. Net advances, according to the exchange filings, grew 20% to 3.2 lakh crores in the quarter gone by. Total deposits too jumped 13% year on year to 3.7 lakh crore, up from 3.25 lakh crore a year ago period. Some of the key factors that the investors and industry watchers should look out for in the results are the outlook on retail deposit mobilization, the margin trajectory, and the management's growth outlook for the year to come. So that's what we have for IndusInd Bank.
All right, and the stock also this morning is trading with a slight cut, but then again, yes, we are seeing the the entire market feeling that down. Heat, and that is being driven by your banking pack, which is down about 1% or so. IndusInd Bank this morning, the stock is down somewhere around 1.3%, but overall, in the private banking space, IndusInd Bank has been an outperformer in the last 1 month, where stocks have, given negative to returns of about 15%. IndusInd Bank has given returns of over 35%. Even on a 6-month basis, again, we are seeing a good bit of outperformance on a 1-month basis as well. But let's carry this discussion forward with Mr. Mohit Gang, co-founder and CEO of Money Control. Mohit, thank you for joining us here on News 9. We were talking about IndusInd Bank numbers and what will be the key expectations, but any inferences that we can draw from the results of HDFC Bank?
Hi Suyash and Amit. Good morning. Look, I think I don't think so. We can draw too much of inferences from HDFC Bank to results of any other bank per se, not just IndusInd Bank, because I think HDFC Bank is a classic case of a big size elephant now trying to make its move, right? So I think the issues of merger with HDFC Limited are still getting sorted out. The bank is in dire needs of deposit growth to fund its credit book, right? And I think those issues are very well known in the public domain. So there's nothing new which comes out from the domain of HDFC Bank. Yeah, the results were a bit upsetting on HDFC Bank, especially on the NIM side, and also to see a EPS decline in over 10 years, I think was a first new from an HDFC Bank kind of perspective. So that's kind of spooked the markets a little, because a bank of that kind of quality with steady, stable results, giving that kind of an outlook was not really anticipated in the markets, right? Having said which, on the IndusInd Bank front, yes, I think the bank for last 1 year, 2 year period has been looking extremely steady and robust on all parameters. Look, honestly, I think we're looking at an ROA of around 2% and an ROE of around 16.5 or around 17 odd percent thereof, which is a great trajectory for a bank of this size and order. It's been showing steady climb in its CASA mix also. I think they are aiming for a 45% kind of a CASA mix. We're trying to mobilize more of retail deposits and retail liabilities, which is actually boding well for the bank. And I think the numbers have already been put out by Amit. Markets is anticipating a good set of numbers, a steady set on NIM, fairly stable out there. So my sense is, I think once the entire dust settles around the banking pack, which should be a matter of few days now, and I think we should see a good uptick on IndusInd Bank. I think overall market sentiment plus the results or the performance of the bank is supporting a good number going forward.
Mohit, keeping to banks and the banking pack, now what we saw yesterday was foreign institutional investors pulling out almost 10.5 crores of rupees from the Indian markets, and most of them were from the banking pack, especially HDFC. If you see the stocks today, most of the banking packs are down or just hovering around the zero mark when it comes to earnings. Is it a time to get into this pack that these banks will not see a drop so much, so investors should rush to buy at these levels, or will the choppiness continue and they should wait for some time?
Amit, look, so we've been fairly bullish on the entire banking pack per se, right? And I think two sectors which we have been very bullish on, which I've mentioned in your shows previously also, in fact, not just now, but quarter back also, were banking and IT pack. Right, so I think we continue to be very bullish on that one. If India as a growth story has to persist, then I think everything will flow through the channels of banking sector, and not just private sector banks, but the PSU pack also. So PSU pack likes of SBI, Bank of Baroda, I think they're looking extremely healthy. The smaller ones like the Karnataka and Jammu and Kashmir Bank are again looking fairly robust out there. And on the private sector part, I think ICICI and Axis looks a little more stronger than the others in the pack. But having said which, I think the pack overall, which is the banking pack overall, I think once the dust, as I said, dust settles around this HDFC thing and the results thereof, I think we should expect a good set of numbers from all the other banks. So my sense is the pack should rebound fairly soon. If the momentum continues in the market, then we will see a good uptick on the entire pack coming back pretty soon.
All right, Mohit, also I want to spend some time on that 10,000 crore pullout from FIIs that we saw yesterday, as Amit mentioned. You know, it was not just the Indian markets that saw this big sell-off. Other emerging markets in Asia also saw a sell-off to the tune of somewhere around $5 billion. What do you think is leading to this, global sell-off in emerging market equities?
Suresh, yes, actually the numbers yesterday were startling. Honestly, I think 10,000 crore in cash outflow from FIIs is a massive, massive number, and not just India, but emerging market pack as a whole saw FII withdrawals, right? And I think that's just to do with one Fed statement which said someone in the Fed official mentioned that the interest rates might not come off as soon as it is anticipated. Plus, there was a higher than expected inflation data coming out of UK, and overall the Chinese markets have also been reeling under extreme amount of pressure. If you see even the Hong Kong market, which is the Hang Seng, it's been bleeding losses for quite some while now, right? So the overall data from China and Hong Kong wasn't very good, which is putting a good amount of pressure on the global demand per se. The US commentary coming out of Fed official wasn't very positive, again casting doubts on the rate cycle reversing. Though my sense is it is still intact, you will keep on hearing such comments on and off, but that led to a spike in the 10-year and the 2-year yields of the US bonds.
Right.
The 10-year bond is now almost back at around 4.1 odd percent, and the US 2-year is at around 4.36, 4.4 odd percent. So that kind of spiked up a lot, and which is what has spooked the markets or spooked the FIIs across the globe, and which is, I think, kind of led to that sharp pullback yesterday.
All right, and I also want to touch on China, and China's economy, of course, last year suffered one of its worst annual performances in more than 3 decades, as it was battling with this crippling property crisis, sluggish consumption and the global turmoil in general. But looking at the Chinese markets, they have also taken a beating. So valuation wise and from an FII standpoint, is China now more attractive than India, where valuations are looking a little stretched?
Look, Suresh, I think the Chinese market story is out there in the open. Honestly, I think the markets have been bleeding very badly for last 1 or 2 years put together, and it's showing no signs of recovering. Right, every day we get a flash of news which is worse than the previous day from the Chinese market. So, from an FII perspective, honestly, I understand what you're saying, and it's a fairly valid point that valuation-wise, Chinese markets are looking extremely attractive for the kind of growth that economy will still put out, right? Even though India as an economy will put out, let's say 7% kind of growth numbers, China will not be very far behind on that size, which is almost a 17 trillion kind of an economy. Putting out a growth number of 5.5% is not bad, to be very honest. But valuation wise, also it is looking extremely attractive. But I think the whole geopolitical scenario around the whole China story and the narrative is changing a bit, right? And my sense is that incremental flow, people aren't pulling out from Chinese market lock, stock and barrel, but that incremental flow, some portion of that has started moving to other emerging markets, especially India and few other emerging economies, and which is kind of making an impact on China. My sense is FIS just don't look at valuations at times. They are also checking the entire geopolitical environment, and the way it is shaping out, the narrative is not very favorable for China. So that's where I think the market is taking a beating. If that changes, my sense it will become a very, very attractive market opportunity to look at.
Mohit, is this buoyancy in China also because US financial officials and Chinese financial officials are meeting in Beijing this week? So that is giving impetus to the optimism in the Asian markets.
I'm not pretty sure of that, Amit. To be very honest, I'm not quite hopeful that a meeting between two financial officials might create a lot of thunder around the global markets. But yes, any outcome out there will be closely watched. But my sense is I'm not very hopeful of some dramatic changes in the market scenario overall because of that meeting.
And Mohit, before we let you go, what's your overall take on the markets? In a market like this, for a retail investor, would you recommend just sitting out and waiting for the dust to settle, or should we continue buying these dips?
Look, Suresh, if you're a long-term investor in the market with a 5-year plus kind of a horizon, and if you're betting big on the India story, which I am for sure betting on, right? There is no point of getting scared with these kind of corrections. Finally, it's a 2% cut, which we saw yesterday. Look, it's not a whole big deal, right? And every year for last 43 years, markets have had a history of having at least a 10% correction once in a year. So I think every investor out there has to be mentally prepared for a 10 to 15% cut, which markets will definitely give you sometime in the year. Whether they give you now or they give you in the second half of the year is anyone's guess. But my sense is, as an investor, you can't get scared out of 2%, 3% kind of cuts, which is par for the course in these kind of markets which have run up so dramatically, right? So my sense is some froth needs to be taken off the market. Some craziness has to settle in. This entire frenzied environment around equities also need to cool off a little to taper down people's expectation from equity markets. And I think it's all very good and healthy. For long-term investors, there's nothing to be scared of. Honestly, I think the overall story and the broader outlook remains intact. And my sense is investors should just stay put and just ride this course. All right, stay put and ride the course. That's the word coming in from Mohit Gang, sir. Always a pleasure speaking to you. Appreciate your time. Thank you for joining us here on News9. But before we wrap things up, let's also look at how the markets are doing, and we are seeing some bit of a recovery. Nifty, for instance, has seen a sharp bounce back from the day's low. We are off about 100 points from the day's low, and Nifty is currently hovering just below the 21,400 mark. Some bit of a resistance could be expected around that mark, because that was a key gap down zone for the market, and so perhaps we'll see some bit of a volatility around that 21,400 mark. Sensex has also recouped some of the early morning losses, and it's back above the 71,000 mark, just marginally above it. But the broader markets, they continue to reel under pressure. Nifty Mid Cap 100 is still down about
2% or so near the day's low. In fact, it could be testing 46,000 levels as the day goes by. The small cap index has seen some bit of a recovery. It has made its way back above the 15,000 mark. In fact, it's about 100 points off that 15,000 level, and volatility continues to remain elevated. India VIX as we speak is up 1.16%, but still remains above the 15 levels. But with that, it's a wrap on this edition of First Take, but stay tuned with us as we'll be back with Business Plus on the other side.
Ram's Ayodhya rebuilt. Ram Lala's Pran Pratishtha. Countdown to January 22nd. Dateline Ayodhya.